Hello. Welcome to my channel, my dear friends. My name is Avilash, and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 1 hour chart of gold USD in front of us. And as you can see here, gold slips on firmer dollar ahead of US payrolls data. Gold prices fell on Thursday as the dollar firmed ahead of a much awaited US non-farm payrolls report as investors sought clarity on whether the Federal Reserve might take a breather on its monetary tightening path. So market is waiting for NFP data because this NFP data is very crucial because it will also decide the next interest rate hike by the Fed. And you can see here ADP National Employment Report on Wednesday showed that US private employers hired far fewer workers than expected in March, suggesting the labor market was cooling. So this is the market situation. And if you look at the chart of DXY, then DXY is showing recovery. DXY is not ready to surrender. You can see here when DXY broke the support, we thought that DXY would head towards the last support of 100.83, but you can see here DXY is back in the game again and right now trading above the previous support, that is 101.90. This black line was the previous support and DXY is, my god, okay. It's like a wrestling match. DXY is not surrendering. And as you can see here, we also have a wedge pattern right now. And a falling wedge is a trend reversal pattern. So yes, after NFP, there is a possibility that market may show some upside as well. Sometimes charts speak before than the news. So the news is coming tomorrow, okay, and we have a wedge pattern on the chart of DXY, so we may get to see some upside for more recovery on the chart of DXY. Let's wait and watch. Now let's look at the chart of gold. So right now gold is standing at the previous support, or the support we discussed yesterday. We can clearly see market beautifully respected the support level yesterday. We saw a clear bounce, and right now market is standing again the support level, but this time the support level is not very strong. We got the nice opportunity here, it worked perfectly, but right now there is not much clarity regarding the support level. Maybe you will get a bounce of 40-45 pips, okay, and try to exit after getting the 40-45 pips because market has tested the level for the second time. And if dollar tries to recover, if dollar shows further recovery, then there is a possibility that market may break 2007. If you are an experienced trader, you can also look for a quick selling opportunity below 2007 level. If you see market going down with candles like this, means I'm talking about volume here. For any breakout or breakdown, my dear friends, probably you know, and you have also heard me saying many times that volume is extremely important. So if market breaks 2007 with volume, you can go for a sell as well, quick sell. I'm not talking about a complete trend reversal, but yes, a sell of 30-40 pips. But right now we can see the market is standing in the support level, okay, so yes, temporary upside is possible. And the next support level, or in case market shows a good amount of selling, then the next support will be around 1996. Already we discussed about this level. 1996 is the best support for the day. Then we have next support around 1987. Around 1987 we have another support. So here strong buyers are present. We can definitely expect the market to get the required support. We can expect that if market touches this level, market will show us a bounce. If we get the bounce we are looking for, if market shows price rejection from below around this area, we will get the confirmation that buyers are still present and we can go for a buy position. You can expect 40, 50, 60 pips, not 40, 50 to 60 pips in this range. So on the chart of gold, I see three trading opportunities. Two trading opportunities are on the buy side, 1996 and 1987. If market shows a downfall and we can expect the market to take support around these two areas. If market takes support according to expectations, we can go for a buy position. If market breaks if market breaks 2007 with volume, with a good amount of selling pressure, we can also look for a quick selling opportunity as well, because market has already done the job once, so we are not very confident for the second time. And if we look at the 15 minutes time frame, then we can see that the moving average here is playing the role of dynamic resistance. To be honest, I am not trading on moving averages right now because of the unpredictable nature of the market, but it is my duty to show you the trading opportunities. So I'm just pointing it out that if market shows an upside during the day, and if you're experienced enough, you can look for some selling opportunity around these moving averages around 20, sorry, let me write it down again nicely. Okay, around 2018 and 2021, you can expect the market to face some selling pressure. If market shows selling pressure, if you want to take, you can go for it, but personally I'm not going to take any sell position, because overall the market sentiment is also very bullish, so I prefer to follow the trend of the market. So I will be looking for buy positions only. And if we look at the economic calendar here, then we can see that overall, okay, there are many news and events for the day. You can see unemployment change for CAD, initial jobless claims for US dollar. So overall, CAD and USD will be on toes because there will be some volatility during the event. So be careful with your Canadian dollar positions and US dollar positions, including gold, because it's XAUUSD. Okay, and if you look at the Forex sentiment meter, we can see that 68% retail traders are on the short side and 31% retail traders are on the buy side. As we all know that market usually move against the Forex sentiment meter, because the Forex sentiment meter shows the position of the retail traders. So if we consider the Forex sentiment meter, then in the coming days there is a possibility that market will show further upside. Anyways, I'll simply suggest, my dear friends, that in this market condition right now, okay, probably you all have heard me saying previously also that quick entry and exit is the best trading strategy right now, and it will be the best trading strategy till tomorrow. After NFP, maybe we'll get a direction about the market, and then you can try to look for positions for 1 day, 2 days, 3 days. But as of now, market is kind of unstable, so as a result, you should be flexible with the market condition and change your trading style accordingly. Okay, that is my request. Anyways, my dear friends, this is my analysis. I can be wrong as well. No trader is 100% accurate. So follow proper risk management. Calculate your position size precisely according to the SL and your capital. Bye bye. Take care. See ya tomorrow.